Good afternoon. Welcome to OptionsTender. It's Monday. Welcome, traders. Welcome, everybody. It's January 13th, 2025. We're going to start off with SPX as we usually do, just to show where we are in the overall big picture of things. And I'm going to go to SPY and go through multiple time frames, our usual analysis, and then we'll go around the horn on the other indices. We just got done doing a video from the big tech, the Magnificent Seven stocks, to help analyze our visual and see if the market has come to a bottom or not yet. I don't think that's the case, but it is definitely showing that we're at minor support in multiple places there. Also, our breadth indicator getting a little bit stronger now. I'll tap into that video. I'll tack it onto the top or at the end of this video so you can check that out. And it also goes through what I think about the big tech stocks and how I look at it, directionally, whether they're looking pretty bullish or bearish, because sometimes the tail wags the dog in the market. All right, so we're doing this intraday at about almost 2 p.m. Eastern Standard Time. If you want to get these videos intraday, consider becoming a YouTube member. It's 99 cents, comes with the Discord, trade alerts, all sorts of stuff. So not asking a whole lot. Just, if not, these videos come out at 4 p.m. So let's jump into it. We have SPX. Here is, it's a monthly time frame. Here's the 2029 top, 2000 top, and 24 top so far. We're at the beginning of 25, but we have not made a new high since December 6th. Okay, so just looking at this perspective, we're starting to get a rejection. Not quite follow through yet. We're still above the 8 EMA, but we're getting a couple red bars here so far. And this is the 2000 top, 21 top. And we're in confluence with that as well. I do think we'll get down to the bottom of this channel. And that brings us into the 62% retracement. It's just a matter of how this does. So there's a bullish perspective as well. I'm not going to talk about it in this video. We'll look at the big picture again soon. Let's go over to SPY. SPY, same look here. Looking at that candle, a little bit of follow through from last month candle. We'll see where we close. This should, I do think this continues. Should get a little bounce here. If you notice, we had this is the breakout zone here. We had a monthly candle that tapped into here, second monthly candle that got a big dip into the 8 EMA and held and started to break out from that point. So that was, this is the level we're really keying in on, is 656. I think that's the likely area where price gets down to. So that's why I'm sitting on my hands right now. I did a couple trade alerts today with some lotto plays going into tomorrow. But anyway, you can find that in the Discord. And the breakout, I think that's where we test back here. It's very natural for the market to test the breakout zone. That brings us right back into that 8 EMA. So that would be, hey, we're in a bullish position. You want to buy that? Well, I do think we get a reaction off of it, but then I think that finally breaks. All right. And the next spot would be this consolidation area, which would also be a breakout zone. You see, we back tested, wicked well through it, but launched off of there. So with that price level in mind, let's look at the weekly. On the weekly time frame, this holding here, we have this low from 2023. We have the low from August of 24. And we're holding right at that trend line right now. So looking at this big picture, we're starting to break down from things. So do I think a low is in? We're just getting a reaction. It's been a very choppy move overall. When you look on the daily, we'll get there in a second. It looks pretty obvious that we're moving down, but in the 65, it's just a real chop zone heading down. It's not, they're not larger hourly candles, so it's very confusing. Now, this 20, I talked about this, the 20-week moving average, such a big area. price has to get back above there to be bullish whatsoever. Okay, so we're breaking down from that. Maybe tomorrow's PPI or CPI. We get above it, and that's fine. That we have to reevaluate what's going on. But so far, just breaking out underneath that 8 EMA, underneath the 20-week. This is our most important indicator on the weekly time frames, a 20-week trend. Also, looking at, see, that's the breakout zone. We're talking about 565, and I've been calling it 560 because there's a zone, especially if we get a catalyst. We could break down into that zone, even the bottom of the zone, and I'll show you where that is. So the bottom of the zone, I'd call 555. That's where the 200 moving average is, and I'll show you on a lower time frame. But you see why this is such an important breakout area. That was our target from 2021 going to 2022. We had our extension off of that. 127 was the important extension. The next one after that was 162. You see how important these areas are? Even broke back down really fast for that move and launched off of there, but finally got above. So that was a breakout. And that's what I think we're coming back into. We have, not a whole lot going on in this zone. So maybe we just get a pause today as consolidation, and then we get a drop after that. But I'm looking for a reaction off of this 561 right here. Now we have some time frames coming up in February. So about a month from now, we'll be looking to see where price is going into this time price relationship. So hold on tight for that. Now going to the daily. On the daily time frame, here's the trend line again. And here's the bearish rising wedge that we broke down from, back tested that wedge, and really that was right where the 20 moving average is. So you see we're breaking down from there. That's our trend indicator. Our 8 EMA, very important on the daily time frame. This is our most important time frame that we trade. And the 8 EMA, the momentum is down. And so just from a common sense point of view, and I don't want to say common sense for a trader, the breakdown here, whether you consider this a descending triangle or a head and shoulder pattern, they both have the same measured move here. So you take the width from the head to the neckline, and from the breakdown point, you have the measured move. So we haven't even come close to that measured move. So I suppose the catalyst would have to kind of accelerate price at this point. So just like here, we got the reaction off the 100 moving average, and we had a catalyst before the market and the big drop there. Same thing could happen here, even though it's kind of choppy and just doing it slowly. This doesn't look like any sort of complete formation, even if you're a bull. Now, Friday, this was our potential bull flag. So we broke down from that, kind of regaining it at this point, if that's how you draw it, if you drew it. Or, to get this reaction here, we're just back testing it in that case. So, again, just a back test there and the 100 moving average, back testing that. But we're looking at it this way as bears. And again, just haven't even come close to that measured move yet. And that measured move would take us right into the zone that we're talking about. And this is the consolidation zone. This is the top of it. So I think that's the shortest, the breakout zone. And I think this is the shortest possible move from this at the 565. And then the longest would take us to the 200 moving average down here at 555. So we'll have to see. It's just sitting on our hands. Let's see if there's time and price here. So we're coming into time and price at tomorrow. Maybe there's some sort of low tomorrow, or maybe that's just again if we get a bounce, maybe that's the high into whatever. We'll see what tomorrow brings, and maybe we'll get a reaction off there. But that's just a single bar. This is what I like. We have something coming into the cluster of the 24th. Looks like through the 26th. So that's a beautiful cluster there. That we'll see where price is going into that, whether it's higher or lower. We'll probably get a reversal off of that. Let's see here. Let's go to the 65. Then we'll go around the horn. On the 65, I still have this drawn out as if we were looking for a bull flag. We did put on protection. I took off some of that. And we're just back testing it right here. So we got the reaction off of closing this gap. So we can get rid of that. That's the island gap that we had from the election. So close that. So it's natural we get a reaction off of it. But again, this is really choppy. I know it looks straight down from this point of view, but it just hasn't been, the decisive move that I would typically think would be in a wave 3. So just cautiously bearish. This is the zone on the 65 that we're looking for. I marked it in green so we can see when time and price, I gave us a zone there going into that area. And I do think it happens within this time zone. And here's the FOMC next meeting there. So maybe we're bearish into the FOMC, get some sort of reversal off of it. We'll have to see what price tells us. Now, changing boards up, we do have a little bit of time and price here. I would guess that the 113 here, let me get rid of this one. That's past. That's just a single bar. Maybe we get a high. So that's kind of really the reason why I did that lotto, is we have time and price on a minor scale here. So we'll see how that plays out. Plus, we're just back testing, and we have further to go, quite frankly. And this is the former all-time high here, so that's where that 565 comes at too. So all sorts of confluences here. And then the measured move, if this is a 1-2 setup, which that's how we're counting this so far, speculative, but that's what we're looking for. And now we have an A, a B, and this is all wave 3 or wave C of 3. So we'll see how that turns out. And this one, if this is the wave C, we should be getting a pulse wave. And so what's just kind of weird about this is there's no defined 1-2, 1-2. No defined 1-2, 1-2. 1-2 is this 1-2, and we're getting wave 3 here, and we're looking for 4, and then we get 5. So I'm really not marking this down. It's just not. Sometimes the market gives you clear things. This one's not giving me anything clear. So this could be a 1, 2, 3, 4, and we get the extension in 5, something like that. I'm not gonna dwell on that. But we have further to go, more than 10 points here. So that's still a big chunk. So maybe we get 100 and something point day tomorrow, and then maybe we get a low with CPI. So also, when you're looking at the trend indicator, the 8 EMA, it's clear that we're really holding on to that 8 EMA, and that's very typical for a wave 3. If we are in the C of 3, then we're not going to get very, very big pops. I just thought that this one would have been something. I'm going to take that out, clean that up, and even going back to the daily time frame, when you have the wave 3, you probably won't get above that 8 EMA. So even if we do bounce, the bounce should be limited, and that would just be a back test of our breakdown zone anyway. So even if I think we'll likely short the market or add on to our shorts if price goes back to the 585. 585, I've been really talking about that over and over. That's a big zone. And I'm not saying that we're going to get back to it, but if we get above 585, then something else is playing out. We'll have to reevaluate this. Is this all of this just an A and we're getting a B, and so on and so forth? Or maybe this is a leading diagonal, 1, 2, 3, 4, 5. There's so many things you can think about. trying to count this and whatnot. So I know I'm not giving a whole bunch of directional information right now, but I think we just continue to our target until the market tells us otherwise. So it's really trying to confuse things. From the Qs, from this perspective, it's kind of the same thing that we were talking about here. We were looking at this being a possible bull flag. Did we just have a fake break and it continues higher? Sure. I mean, you can look into that, but this is how we're looking at it. And this is a descending triangle, broke down from that triangle, and I came into some support here, but there's, again, didn't come to any major support. This would be a good one here at the 497. I would definitely see a bounce off of there, but still we have our measured move. If this is a triangle, you have a measured move, the breakdown point takes us right into the zone that we've had labeled here as our green zone, our buy zone, and still a long ways away. So let's see what the catalyst brings, and we'll go from there. SMH. SMH, if you have a triangle here, we're just getting a reaction off of that triangle. I do think it breaks down from that point, but it looks like this one just came straight down, and the video looks the same. So do we get a bounce? Possibly. Big one about the SMH is that we're right back at that 200 moving average, and I think that's going to break eventually. So I don't know if it breaks directly from here, but we're at it, so it's just not it's not a surprise we're getting a reaction off of it. But maybe this is just a bear flag and we continue, and that would play out exactly what the market is doing itself. So maybe this bounce is just meager so far. Now we broke down from important levels here as well. Just like on this last board, we had this really good level and we started to break down from it. So there's nothing bullish here. You have maybe a minor support from these lows, but we haven't even reached the major supports yet. So I do think this goes lower. I don't think this one's going to lead anymore. I think the Qs have to do it, but clearly you think this is, if we do get a bounce, it looks like this is the initial, maybe possibly wave 1, 2, and then you start getting extension 1, 2 with a bounce and lower. That's a possibility. Or this is all one big wave 1 and we're almost done there, because we are at the 200 moving average for IWM. So I would think that one starts to get relatively stronger than the Qs, but I think the Qs will do the damage. DIA is holding up a bit, but looks pretty much the same as IWM. And then the VIX. The VIX is at an important level. We've been talking about this 19 level for some time here because we kept rejecting off of it. All right, and it looked like some sort of ascending triangle or cup and handle. And we broke out from it, held it, and it looks like we're just back testing that again and close the gap. So, not a straight trend here, but we'll see if we get another move up. And I think the natural spot would be to get up here to the 23 area. So still higher highs and higher lows until it tells us otherwise. Our first sign here would be for the VIX to break below 19. If and when that happens, that was, the move here, that was a breakout. And so that would be a false break at that point. And the market should be going on to a bounce at that point. But nothing says otherwise yet. So I'm not going to start making any big moves to the upside. Or even adding on, too many hedges unless I see this start to break down here. So I hope that helps. Wanted to get this video out to you. We weren't able to do one this weekend with the internet and stuff. The interweb had broken down for me. So we're back and we're ready to go. So welcome back, and don't forget to like and subscribe. We'll talk to you soon.